Coming off my last video talking about how to invest in real estate, how to make yourself profitable in 2023, I'm going to go right into why the US dollar is going to fall off as the reserve currency of the world and why that's so important to us here at home in the United States. Why do people care? Why should you be paying attention? But more importantly, why is this happening? The first thing I'm going to go into is an article here that talks about the dire warning and the threat of the US dollar and why it's falling apart. As we see here, since World War II, the US dollar has been the world's strongest currency. It's been something that underpins almost everything globally. So when you go buy oil in Venezuela, you go buy precious metals in China, you buy tea in India, all those things are underpinned by the US dollar. And when we stop trading in the US dollar, we start to have a lot of problems. So one thing this article points out is it's not just a threat, it's inevitable. After World War II, the US was the biggest economy in the world here, and we still are. In the 70s, the global banking became basically the dollar central. And with the fall of the Soviet Union, the entire world more or less came under the domination of the US dollar. Yes, it's somewhat drifting away. As we've seen, China and Russia are starting to build an alternative block of currency. And this person predicts that in response to China's ongoing efforts to disband from the dollar, they began a strategic process of de-dollarizing their business dealings during the Russia's invasion of Ukraine last year. Nearly 3% of the reserve currency of the world is sitting in Chinese yen. Wow. And a lot of people have asked me, why is this going on? So let me back up a little bit. There's 4 things I want to go over before I get into how do we actually hedge against the US dollar to make money. So the first thing is we have economic challenges. The United States has faced a number of economic challenges in recent years, including high levels of government debt, large trade deficits, and that could erode confidence in the dollar as a stable form for global transactions. Number 2, geopolitical shifts. Other major economies like China, European Union, India, that are moving away from the US dollar. I actually saw this morning that the Crown Prince of Saudi Arabia said he is no longer interested in pleasing the United States. So that should at least, get us to start thinking, hey, how are we going to move forward in a world where the dollar doesn't underpin everything? Number 3, central bank policies. So the actions of the US Fed, including interest rate policy and quantitative easing. And then number 4, alternative currencies. So other currencies such as the euro, the yen, digital currencies like Bitcoin, they're becoming increasingly popular as alternative stores of value and mediums of exchange. As these currencies become more widely accepted, they may challenge the dominance of the US dollar. Now, it is important to note that the US dollar remains the most widely held reserve currency by far, and any kind of shift that you see will likely take years, if not decades, to bring to fruition. So, how do you invest against the US dollar? I'm going to go over 5 with 1 bonus at the end, so make sure you stick around. The first thing you can do is you can invest in foreign currencies. So investing in foreign currencies like the euro, the yen, the Swiss franc I just mentioned can help you diversify your current holdings and reduce exposure to the dollar. So where do you buy these? So one is a bank, so Chase, B of A, wherever you do your banking, you can buy foreign currencies there. Currency exchange offices, maybe you've seen them in an airport. Before I went to Europe 2 years ago, I actually went into a currency exchange in a mall, of all places, and did a currency exchange there. You have online currency exchanges that I've shown here, such as z.com, so you can send money, you can convert money. If you wanted to, you can see, hey, what's the dollar trading when it comes to the euro? If I put in $100, the dollar's trading a little weak to the euro right now. You see you get 91 euros for every $100. And then if you want to, you could actually send money here. If I wanted to, I could send the US dollar. I'm sending it to the United States. And I'm sorry, let me say I'm going to send it to, let's just say the UAE. And it's actually going to calculate out how many dollars I would get for their current exchange. So let's say I didn't want to send it to, let's just say Japan. I'm going to get 129,245 yen. And then obviously you have, ability to move that in through a checking account. You want to pay by credit card, you can do anything like that. And then number 4 is ATM. So there are ATMs out there that you can use to facilitate that exchange. So put $100 into the ATM and they will give you back whether it's yen, euros, francs, whatever that may be. The second way to hedge against the dollar is to buy gold or other precious metals. So if you're looking to buy precious metals, one place I use is APMEX. These are dealers that are online. This is a way you can actually go through, and I'll be right back to that in just a second. You can go to coin shops. I've had family members that have used coin shops before. What does that mean? You take in some money, maybe it's $1,000 or $100, and say, I want to buy some physical gold with it. And you take that home, physical silver, platinum, whatever it is. Maybe it's really rare coins. Maybe it's one of the first silver dollars that came out the United States minted back in the 1800s. You can do online marketplaces like APMEX. So in this case, if you wanted to, you could go through and say, hey, I want to purchase some gold. I want to see what's available. And you can go in, create an account and say, I want to buy 1 gram of a gold bar. Looks like this is actually on sale. And it's just like Amazon. You can add it to your cart, check out, and then they will ship you a gold bar. So couldn't get any easier than that. The other way though, if you're not interested in bringing in ETFs or things like that, is you can actually move over and invest in precious metals ETFs that track the price of gold or other precious metals. I've invested in some of these. I actually put a list here, and I'll link this down in the description, but I do have a list of all the precious metals ETFs that I either have invested in or that I would invest in. One of these is the Invesco Precious Metals Fund. So this right here, you'll see this is an ETF you can purchase on any major exchange like Robinhood, TD Ameritrade, etc. DBP tracks an index of gold and silver futures contract. It optimizes its contract selection. And you can see in here, it's got cash and it's got government bonds. One of the other ones that I like is if you just want to buy gold, the SPDR Trust, Gold Trust here. This is one I've used either individually, or I've had it in other portfolios of mine, molded with some silver, with some government bonds, with cash, or with treasury yields. But this actually tracks the gold spot price, minus your expenses and liabilities, of course, using gold bars held in London vaults. So this is not just, hey, this is not paper gold. This is actual gold that's being listed in a vault. So something to be aware of. And then you can also, go back through and see how well it's done. So over the last 5 years, you're up almost 50%. So something to be aware of. The third way is to invest in foreign stocks or ETFs. Investing in foreign companies or exchange traded funds can give you exposure to other currencies and economies, which can help reduce your overall exposure to the US dollar. So where to buy? So you can go to online brokers. We talked about this before. So anywhere you buy international stocks and ETFs, again, this could be Robinhood here. This could be TD Ameritrade, Schwab, E-Trade, any of those where you buy ETFs or individual stocks. Interactive brokers that specialize in providing access to international markets. They may offer lower fees and access to a wider range of international stocks and ETFs. And then the last two I've talked about on the channel before, mutual funds. You can invest in mutual funds that focus on international stocks or ETFs. These are managed by professional fund managers and offer a convenient way to invest, but they do have fees with them, so be careful with that. And then the last one is robo-advisors such as Betterment or Wealthfront. I've talked about that before. I'll put a link up here for a video I made on Betterment investing. Number 4 is investing in currencies or currency futures or options. Currency futures and options contracts help you lock in a specific exchange rate or hedge against currency fluctuations. So right here, if I look, what are currency futures? They're basically exchange traded futures contracts that specify the price in one currency at which another currency can be bought or sold at a future date. So we've talked about options contracts on this channel before, but I'm going to link this article down in the description, so check that out. Basically, it's a way for you to lock in a price today for what might happen in the future tomorrow, 30 days, 60 days, 90 days out. This is a little more complicated. I wouldn't recommend this for somebody who's brand new to investing. I would make sure to understand the pros and cons, understand things like margin calls, margins. Make sure you understand the way that currencies move. So if the euro moves one way, how does that affect the dollar? In general, it's something that I would make sure you understand before you do it. Number 5 is invest in real estate. I know, kind of counterintuitive to where we've went so far, but if you stick with me, I'll explain it to you. So real estate is often considered a tangible asset, can retain its value in times of currency devaluation. So I know that currently interest rates are high, inflation is high, or peaking. That's a whole other conversation. Interest rates are starting to kind of top out a little bit. But if you think about real estate, whether that's commercial office real estate, residential real estate, single family, mobile home, whatever that may be, there's only so much of it out there, right? There's no more land. We're not going to build any more land. We may build new homes, we may tear them down, but we're not going to be building any new land. So there's only a finite amount out of it. So how do you buy real estate? Well, one of the ways that I like to invest in real estate is direct ownership. So that's buying a property outright with a mortgage, then renting or leasing it out to generate income. This can be a good option if you have capital to invest and are comfortable managing a property. Number 2 is the real estate investment trust. So I go back over here and I type in REIT. There's plenty of REITs I can invest in, whether you want to go through Schwab, you want to go through Vanguard. So if I look at this Vanguard REIT fund, this is a REIT that underpins with 99% real estate, a little bit of communication stocks, but this tracks a market cap weighted index of companies involved in ownership or operation in real estate. So that could be anything from American Tower, Equinix, Public Storage, Simon Property Group, the malls. That's where you can invest in. So if you don't want to go out and buy an actual house, you don't want to put a down payment, deal with toilets, deal with tenants, all that, you can invest in a REIT. These have been extremely popular over the last 20 to 30 years as more people start to diversify out of the stock market and into things that are revenue generating assets. Again, this is not the only REIT there is. I'll post a link down in the description for a list of REITs that I would recommend getting involved in. The next way you can do it is through a real estate ETF. So much like a REIT, mutual funds or ETFs invest in a portfolio of real estate related assets such as REITs, real estate development companies, mortgage-backed securities, MBS loans from 2008, 2009. If you remember those, you can invest in these funds through a brokerage account. And the last thing is real estate crowdfunding. So I've talked about Fundrise before, but real estate crowdfunding platforms allow you to invest in real estate projects alongside other investors. You can invest in these projects with as little as a few thousand. I think Fundrise does 500, but there's a couple more I'll link down below. Fundrise has been my number one for crowd-funded real estate investing with the lowest fees and the best returns. But the ability to invest with just a few $1,000s, again, you're not having to go out and buy the house, you're not having to go out and fix the toilet, you're not having to deal with the tenants at 3 a.m. when you're on vacation, things like that. Now the last one, it's definitely a bonus, but I'm glad if you stuck around this long, then you're probably waiting to hear it. The last one is invest in cryptocurrencies. And again, I know with the way crypto's been, especially in the fall, with FTX, now we've had Silicon Valley Bank, not necessarily a crypto issue, but we've definitely had an issue with the ability to understand what the market's going to do from a crypto standpoint. So I would say cryptocurrency such as Bitcoin has been used as a hedge against inflation and currency devaluation. So Bitcoin's actually held its price fairly well since it was brought into the market in 2008. Be careful with those altcoins. Make sure that you understand what their purpose is, understand what the underlying contract value is, and if you feel comfortable with that, then continue to invest. Hedging strategies do come with risk though, and it's important to make sure you consult with a financial advisor before you make any investment decisions. So there you have it. Let me know what your comments are below. What are you investing in? How are you investing? What are the top 5 ways you're hedging against the US dollar? Do you think the US dollar is going to collapse? Let me know in the comments below.